Welcome. It is 10:30 on a Monday. You know what that means. It's time for futures trading with NinjaTrader. We're going to talk about the futures markets, the S&P, the Nasdaq, the Russell. We're talking Bitcoin, crypto, gold, what to watch out for this week. The question that we are asking on today's show is now the time where the market returns to a lower volatility environment? We've been pretty volatile the past couple weeks. Ranges have been pretty larger than normal. Does that volatility come down? If it does, how do we trade it? I've got Jim Cagnina from NinjaTrader here with me to answer that question. So let's go. It is time for futures trading. Hit that like button and let's roll that intro. Jim Cagnina, Senior Education and Training Specialist for the NinjaTrader platform. Jim, how are you doing today?
Doing great, man. Doing great. Had a great weekend, relaxed, ready to go. How about you?
Much the same. My question for you, though, is are we red or are we green so far today?
We're green so far today.
Green so far today. Excellent. You love to see it.
Yeah, for sure. We have a E-mini S&P daily chart right here. You can see the green candle forming as we speak. And the magic of this, I don't know if it's magic or coincidence, but my support and resistance line that I drew from early December all the way across, we're trading at it right now. And it's almost perfectly aligned with the Fibonacci retracement high to low. So these levels sometimes have self-fulfilling prophecies. It's amazing to me. So we're right at that support and resistance line.
So wait, that line, this is a daily chart on the S&P.
This is a daily chart, yes.
Okay, so that line is what you drew several months ago. And the line is looks like it's at like 4,700 and 4,500, right?
It's 4,502 to be precise.
Okay. And that's where we've been several times today.
Yeah. I mean, and you can see the last, previous session and the previous session before that, smack dab in the middle, right? We're kind of finding price happiness right now. Maybe it could be that market uncertainty is slowly dissipating.
So let's talk about that. Actually, no. Before we talk about that, let's go into the other markets here, and we'll just run through those. We'll run through the Nasdaq, the Russell, crypto, oil, gold, and then we will get to the point I was just talking about volatility and how that's been and how that could go.
Sounds good. All right, let's do it. We're going to go to the Nasdaq right now. Structurally, these markets are a little different, even though they're stock index futures, because they're different components, right? And here, my line in the sand, my equivalent support and resistance line is way down here at the 23% retracement, and we're trading above it right now. I have a turnaround doji highlighted here, and a lot of times when I see that structure, it tells me that the direction of the market's going to change, and in this case, it did. It doesn't always, but we had this rally back up from the lows. Turnaround doji here where the body of the candle is at the top or above the highest wick previous to it, and then sure enough we had a break back down. This is a little bit of weaker market than the S&P, I think, from an overall daily bias point of view. The Russell 2000 is even weaker. We have the death cross kicked in. Me and you talked about that being meaningless, but I thought it was cool to leave it on the chart, so we left it on the chart. Yeah. My channel here, we did break out of the channel, but the top of my channel is now a trend line. So I want to see if it trades along that channel or this whole channel and trend line becomes irrelevant. But we're below the 23.6, and this is going to be the toughest one to appreciate, I think, in my opinion. The CCI, the MACD here is right at zero pretty much. It's a nothing burger. YM, I think, is the strongest. I put all the companies there. Why are they the strongest? Well, look at these companies, man. These are serious companies. And a lot of buyers coming in. We talked about this last week. A lot of buyers on a daily basis, right at that 50% retracement. And I think looking for places to buy this market. I love this big wick here from last session. I love the big wick that's generating today so far. Knock on wood. We'll see if we can continue. That's representing buyers to me.
All right, looking strong in the Dow Jones. I like it. I
Yeah,
like it.
yeah,
What about
yeah.
gold?
Gold is right here. We're in a bullish channel. It's only been a few days, but we're in a bullish channel right now. We've sustained that pop, over $1,800 mark. We have some buyers coming in today. Let's see if we break out of this channel here, break above the 20-day moving average, and see if that MACD starts to cross over zero. But I'm bullish in gold for sure, especially from a day trade point of view today. And we'll keep an eye on that one right now. So it's finally kind of moving in a trend. So I'm excited about that. Crude oil, forget about it. I'm bullish, looking for places to buy. End of story. The thing that I'm going to
how do you buy crude right now in a market that's ripping like crude has been?
Great question. So here's the thing. I mean, I don't know if this was a tip of the day or not at one point. It might have been, but don't say it can't go any higher. In a down market, don't say it can't go any lower because it could. We don't know, but by all indication, this is a bullish trend. I'm going to go with it. Why can't we get to 105, 110, 120?
Yeah,
that's not by not willing to take the trade now. You're missing out. Now I could be wrong. We could break down and it would be a loser. But that mentality, it can't go any higher. I hate it
because it always can.
It always can.
Yeah.
And we're serious geopolitical considerations here in this market. We have this serious transition going to, this carbon-free zone environment, alternative energy, and all that stuff. So there's a lot of moving parts here. Although, we like to buy our stuff, and most of the stuff we buy in our cars and our transportation come from crude oil. So it's going to be interesting. Treasury bond just moving forward here on a daily chart. Bearish. This is inversely related to interest rates. The whole yield curve is shifting. The longer term rates now are getting bigger, and as a result, I think we're going to see continued downward pressure on U.S. Treasury bonds, as it should be. So we're still way at a premium. I mean, we're trading 153, whereas par is 100. So there's a lot of downside here in this particular market.
And Bitcoin,
we stepped up a step. Remember, we had an area of support. We were breached. Another area of support. We were breached. Another area of support, and now we rallied. Now we stepped back over. Huge gains these last 2 days in Bitcoin. This previous session, today's session, and it looks like this market is going to close above this area here. Very, very, very bullish pattern right now in my mind, and we'll see if it continues. If you train your eye over to October, look what happened. We hit lows where we had that like level of support down here, and then we just kept buyers. So now I'm not as bearish as I was anymore, my friend.
Do you have like a level here or a potential trade you're eyeing or no?
Yeah, I mean this level right here. I want to see, if you're bullish here, this is a really, really nice level as an area of interest or a target. 45,500. It's right at that level where I drew. And again, it could be a couple ticks up or down, a couple points up or down. But this is a target. And do I expect Bitcoin to get up there at some point? It's looking good. It's looking good. And there's a lot of meat on the bone there. So I'm considering that. Again, my opinion, I could be wrong, but we'll see if this is a market uncertainty thing, right? It's the theme of what I'm talking about today is that now we're kind of taking away some of that uncertainty. We're going to have more kind of regular, and I'm going to show you something on the S&P daily chart on that note in a minute.
Yeah. Let's bring that back up. So that gets at the larger theme of today's show, which is the market has been unusually volatile, and not so much in terms of like the VIX. The VIX has been rising, but that's not really what we're talking about. We're talking about like the daily ranges, and and in the overall market and in individual stocks. Right, last week we saw the largest ever market cap decline in one day for a stock, and the very next day was the largest gain ever on market cap in the stock. Like, we're seeing some big swings out there.
Crazy, I know. So I mean, let's just look at this daily chart. Let's go all the way back to October 18th.
Okay.
And you can see these candles. They're baby candles. These are little baby candles. They're still baby, all the way up to here. And then boom, remember this day, right? This is Omicron Friday.
I remember that day, yeah.
All the HE double hockey sticks broke out. And look at how big these candles are now. You had a couple of exceptions in the middle here, but then all the way down, huge candles. All the way retrace back up, huge candles. So what I'm saying is, I think now that some of the uncertainty is the cat's out of the bag on interest rates, on QE, and I expect this kind of normal behavior. Whether it's up or down, I don't know, but I expect the smaller candles to start kind of creeping into the equation.
Okay, so you're thinking we're going back to the way it was back at the end of last year, which is just normal. And when I say normal, really smaller daily candles. How do you trade that as opposed to these past few weeks?
Well, okay, great question. Let's shoot over to a intraday chart for sure. That's a great question. So more of a reliance on volume, right? So when you know or you never really know, but when you think it's going to be a tighter range, smaller range day, then you could really rely on these volume profile histograms to kind of behave in a normal Gaussian distribution pattern. And then you could do things like sell the top of the value area, buy the bottom of the value area. I mean, look at the point of control. Every single candle's traded through this point, 4,500. I mean, ever since what time? It's 7:40 Eastern time, right? So this is showing me normal behavior. This is showing me how the markets kind of react, even with this big price dislocation we had when Europe opened up and kind of creep back up. And that's kind of number one. Number two, in my mind, is you do have to consider the entire field, right? So when I drew my Fibonacci line, it was pretty much low to high on the whole session. This is a 23-hour session. And it's, because the daily range might be smaller, we have a better chance and have way more opportunities. This is advantage futures, right? On the open, we could have done some good. We had a swing low here, swing high, swing low, swing high. And you don't have to have the pattern day trade account to do this. You could do it in a micro contract and a big contract. So you have this whole entire set of opportunities 23 hours long. I know I'm going off on a tangent a little bit, but you could use the whole range, and you could use your technical analysis and really focus on that volume profile.
Okay. All right. So that's a pretty good way to approach the market for this week, at least in the S&P futures. Do you have any active trades on right now, Jim, or any trades we are maybe looking to put on, or any trades that you just got out of?
Well, I did just get out of a gold trade, but I'm going to just take this as an example here. I'm going to go ahead and just, oops, my bad. There was pilot error, everybody. All right, I'm going to go back here. I'm going to adjust my fib. This is the ES, right? So when I look at this chart, I'm going to say, hey, this is an area of what I'm going to call resistance at the top. There's a candle wick here that's very attractive from a price point of view. I'm going to split the difference here, and I'm going to throw an order into sell a contract right in the middle, 41.10.5. Right, limit order. I'm going to be patient. I'm going to wait. I'm in a real-time sim account today, everybody, so don't get too excited. Now, alternatively, I'm going to do the exact opposite on the bottom side. I have my area of support here, and I drew my rectangle down there. And the way I draw it is on the when the rectangle's below, right? I'm trying to identify area of support. The top of my rectangle kisses the body of the lowest candle, and we haven't had a close here. So again, I want to see this wick attack now, and I'll do the opposite. I'm going to go ahead and try to send an order to buy a contract right in the middle of that big wick here that's inside my rectangle. And then the other rectangle where it says resistance is just kisses the bottom of the highest candle. That's all it is.
So again, the sell order would be midway through the rectangle. The rectangle is drawn at the top of the close of the last two 10-minute candles.
Exactly.
And then vice versa for the buy, it's drawn at the bottom end of the close for those 10-minute candles, those double bottom right there. How far down do you go though, Jim? How do you know how far down to go or how far up to go on the box on the squares?
Well, I just want to kind of clear the wick, and it's not that important, but I just cleared the wick. That's all.
Okay.
And stuck it there. Now there's a train of thought too that says, hey, I don't want to get in. I want to break through your rectangle, and then I want to sell one up here. It's a very conservative point of view, and then you run the risk of this then becoming a market that runs away against you. So that's why I kind of like to let it settle down here. And I've seen so many times these wicks get challenged, and then sure enough, it goes your way.
So here we have this is a potential trade, right? A potential long and a potential short for the day. Where would you, like, what would your exit plan be on these trades? Like, let's say you do get, let's see, we're closer to the, where are we right now? So we're actually closer to the sell order than the buy order. So let's just say you get filled right now at 45, 10, 50. Then you're short. Where would you get out of that trade?
Yeah. So the beauty of this is, if we sold the contract up here,
right,
our buy is now a target.
Sure. Okay. Right. That makes
now,
sense.
What I would do though is I would adjust it upward a little bit, and I would say, hey, here's the bottom of the value area. This is a very interesting area of interest. And then here's the 50% retracement. I would probably move it up between the two, split the difference. And then that would be my target.
Okay.
Makes sense?
Yeah, makes sense.
Okay. Yeah. Now, so I get it's kind of paid. You got to wait and wait and wait. And that's trick in trading, in my opinion, is patience. Let the market come to you. Don't chase it. Don't get crazy. The second best thing that could happen to you is you don't get a fill.
That's the other alternative too. You just not get in.
Yeah. I mean, the best thing is you get a fill and it's a winner. And the third best thing, which isn't the best thing, is the worst thing, is you get a fill and it's a loser.
Yeah. So this is for the S&P, but the same logic would apply to any market.
Yeah, I mean, so now the micro Nasdaq, I would take a different approach, right?
Okay.
And remember, it looked a little bit weaker from a daily chart point of view. And so I have that in the back of my head. And because it's a micro, I could scale in, right? I could scale into positions. So because it's 1/10 the size of the regular one. And from a relative risk point of view, it gives me more breadth of market, I'm going to say.
Yeah.
So again, I would use the fib lines. I would use the point of control. I'd use the top of the value area to try to scale in. And right away, that 38.2% right in the middle there, this would be kind of unit 1 as an example. Maybe the 23.6 would be unit 2 as an example. This would be kind of a conservative approach. And then if you're really aggressive, maybe 50% would be unit 3. And, we'll see what happens here as we're talking, because I'm throwing these in right now as we're talking. Is the real-time data. And it gives us, if we were to get filled on all these three, we'd cost average in, basically. We'd be short 3, but which is still only 30% of a classic size Nasdaq, E-mini Nasdaq. So it gives us the ability to be patient, put our stop further away, and then maybe put our targets in a really nice juicy place on the chart.
Okay. Awesome. If you have a question on any futures market, micro Nasdaq futures, S&P, Bitcoin, whatever, please drop them in the chat. Jim is your guy for that. Jim, do we want to get to our tip of the week right now?
Yeah. Let's do it.
Let's get to Jim's NinjaTrader of the week. What do we got?
All right. All this talk about things settling down and average true range, average daily range settling, I'm going to put an asterisk by this. Mm-hmm. Double whammy Thursday. CPI, Consumer Price Index, going to be important. Consensus is 7.3% year on year. Last print was 7.0. Really, really important inflation gauge kind of thing. And then, of course, jobless claims are on the same day at the same time. So all this talk about volatility and ranges and stuff, keep that in perspective. On any given Sunday, anything could happen. So pay attention Thursday. Have your stops in.
How do you normally trade those numbers? Like, let's say it is a hot number. Let's say inflation comes in at CPI comes in at 8%, right? That would be hot.
Yeah. So my point of view is this. Let's we're short one Nasdaq right here.
Oh, look at that.
We got
to fill.
We got the first one. Yeah, we're going to be patient here for a little bit. But my point of view is this, Spencer. The number comes out at 8:30 East Coast time.
Yep.
The market's going to go haywire. I don't want to trade around that. Again, it's pre-market also, right? New York hasn't opened up yet.
Mm-hmm.
Then 9:30 New York opens up. So we're going to, we monitor the candles, we monitor the behavior, and then wait for one more candle, the 9:40 candle. I'm all 10-minute charts, and then we're gonna look for a trade idea. So it just depends on the price action, but a lot of times you have such crazy volatility between when the number is released and when the market opens up that you can't withstand the heat. So my approach is patience. Wait till 9:40.
Wait till when you say the 9:40 candle. Does that mean 9:40 or does that mean 9:50? Does that mean the candle?
No. All right. So 9:30 to 9:40 candle. Let that happen.
Let that happen.
And then the 9:40 candle. Then focus. Really focus your attention and look at price action and the wicks of the candle, and go from there. That's kind of my point. This is an interesting formation too in the micro. We got a higher low, a higher low, a higher low. Even though it's just a little bit. Then we got a lower high, lower high, lower high, lower high. So we're kind of crunching in here. We're coming into a triangle kind of pattern. If I draw the lines, it'll kind of mess up the presentation. So I'm not. And the VWAP is kind of oscillated between red and green and red. So anything could happen. CCI sideways. I think we're in a good spot here on this trade idea.
Yeah. So just to clarify, just to repeat what the trade is, you are short one contract of the micro Nasdaq futures right now, and you got to fill at what 14,709.05, right?
Yeah. Yes, sir.
Yeah, and then we're looking to sell. We're looking to short two more contracts, a little bit higher, with the profit target down at 665 and a quarter. I think that's what that says.
Yeah. So this is the first profit target. Again, we only have one unit, so you can't really put more in. And then, it's 665 and a quarter. And the other thing to kind of complete the whole setup is a stop loss, right? So we're going to do a buy stop. We're going to do above the highs. We're going to tighten this up as the trade percolates. We're going to change it to 3 contracts because if I get short 2, 3, that's what I want my stop to match. I want the math to be even. And we kind of dynamically take a peek as we go. The beauty about the micro futures, again, you could open an account with a lot of different brokers for hundreds of dollars instead of thousands of dollars and trade these 23 hours a day, is the ability, again, if this goes against us and we get our second unit, which is what we really want, we just missed it by a tick too. Our unrealized P&L isn't that great. It's not something to freak you out. But if you're patient, you could really get some traction here in this market.
All right. At the moment, it's simultaneously working for and against you because on the one hand, your one short is profitable, but you're not getting the other two that you wanted. So it's sort of a
right. Yeah, exactly. And there's nothing wrong with getting one unit. Yeah. Winner, chicken dinner. But this is the strategy here in this market, and you could have a wider breadth again because it's a market. It's a micro. Maybe this trade takes all day. Maybe it doesn't. But if you're in it to win it, you could be patient.
All right. So we have a live trade. Jim, do you want to walk through your gold trade from earlier and how that played out?
So gold. Here's the gold trade, and let me just go to my data series. I want to add the markers so you can see them. What this does is it'll show you where we entered. Again, past performance, then indicative future results, guys. This was from the earlier morning presentation in my sim account. And so we did the same thing, right? I wanted to be patient. I want, the way the profile was before, because the market profile changes, right? The point of control was lower. It was down here when we put the trade on. And 50% retracement was still valid. So we kind of split the difference here. And we got long right there. That's that blue line. Blue carrot, I guess you call it, Spencer. We took some heat on the trade, right? And my stop had to be below my rectangle. Then I haven't changed this rectangle since. Then finally we had this kind of knee jerk. This is a big candle. I'm not sure what triggered this, but 10:20, which is an odd time, to 10:30. Boom, buyers came back in. Our profit target was right there, right where the point of control is now, which was the top of the value area before, for 18, 16, and 30 cents. So that was the trade earlier today. But again, I'm bullish in gold. We had a nice trend up this morning. I waited for the pullback before I just went long. Didn't go long. I could have went long up, on the open. It wouldn't have worked out so well.
Yeah.
So that was I think the lesson learned on that particular trade idea.
And it didn't work for a little while, but you weren't necessarily, like you didn't freak out as soon as it went against you.
Correct.
Right.
Correct.
Yeah. All right. Well, again, guys, Jim Cagnina is the senior training specialist on the NinjaTrader platform. He's their senior education and training specialist. So if you have any questions for Jim about trading futures, this is what he does all day with the S&P futures, with the Nasdaq, with a decent chunk of the futures market. So if you have a question about that, how it works, I would recommend asking now, or at the very least checking out Jim's other webinars. The links are in the description and pinned to the chat. You can go to ninjatrader.com/get started /platform training or /events. All those links in the URL, and also are case sensitive. So when you see capital P and a capital T, make sure you're doing that. So, but again, yeah, go ahead.
If I could just throw in there just a little plug. We do so Monday through Friday, starting at 9:10 East Coast time. We do exactly what I'm doing here. We look for trade ideas. We do a technical analysis. We become aware of what's happening from a macro and fundamental point of view. We come up with trade ideas. It's 9:10 to 10:15 Monday through Friday. It's free. You can come there. You go to the NinjaTrader.com/events page. And click on the link and join us anytime. And it's an open dialogue, questions and answers and comments and observations. And I even appreciate when people say, well, why would you make that trade? What's the matter with you? It's great feedback. I love it.
Hex 214 Pony wants to know Bitcoin can go to 44K. And also Dana wants to know how many trades you take a day or a week, Jim?
So both great questions. Let's start with the Bitcoin first. Let's see if I can pop that up. So again, I've got two distinct areas here. This is level number 1, 41,665. I think that's doable. Oops, I'm sorry. We did that one. The next one is 555. Sorry, 45,555. These numbers are kind of getting confusing. I think that's the next big target. And then at that point in time, what I would do is I would draw another Fibonacci retracement and just go swing high, which is way over here, to swing low. And I'm going to start using these fib lines as areas of interest. 38.2, 50% retracement. And look where 50% retracement just goes right, just kisses right against the top of these candles here, right? You could draw another shelf right here, or a ceiling, I should say. So I don't think it's unrealistic to get up to that 50%, but I really want to see it get up to here, close above this 555 number, and then I think we could be off to the races. That's for that. And what was the second part of that question?
How many trades do you take a day or a week?
So my philosophy is this. My philosophy is become an expert at 1 or 2, 3 at the most of the futures markets. Remember, there's all these asset classes: treasuries, the yield curve, metals, energies, currencies, the great markets, and stock index futures. Become an expert at 2 of them, maybe, or maybe 3 of them. And I think there's probably, maybe 2 good setups a day per market. So not a lot. I think it's a mistake to overtrade, to do too many of them. Get in a groove where you could master a time period. Maybe it's 9:30 to 10:30. Maybe it's at the close. Focus on 2 or 3. Become an expert at it. I think you have a higher chance of being successful.
Awesome. All right. Jim Cagnina again joins us every single Monday on Benzinga to run through the various futures markets and looking to see, always giving us a preview of what he's looking for later in the week. In this case, he's watching for CPI and jobless claims on Thursday, hoping for smaller daily candles, right? Smaller, shorter candles, less volatile market. So we'll see if that plays out over the course of the week. And either way, Jim, we'll talk to you again next Monday. Thanks for joining us as always.
Spencer, my pleasure. Appreciate being here, and thanks for having us.
All right, that's going to be a wrap on futures trading with NinjaTrader. I'll see you guys in a half hour on Benzinga Live, so stay tuned for that. Please hit that like button. And again, for any more questions, comments, concerns about how to trade futures, when to trade futures, where to trade futures, check out the links in the description, on the screen, and in the chat. Can't recommend NinjaTrader enough. This is what NinjaTrader is meant for, right? Different brokers are ideal for certain things, and NinjaTrader, this is what they do. They do futures, so check them out. Hit that like button, hit subscribe if you haven't already, and I'll catch you guys next time. See you over on Benzinga Live in a half hour from now.